Welcome back to Trade 360. I'm Diane King Hall. Time now for the big 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades is Kenny Polcari himself, senior market strategist at Slate Stone Wealth. Kenny, you have quite the reputation. Our guest who was on just ahead of you was like, Kenny's going to be on. I had never met him in person. I didn't break it to him that it wasn't going to be this time. So it is great to see both of you. Kenny, before we jump into the names on your list today, I want to get your big picture thought on the market. I know I got your note this morning with the recipe, but let's talk about these records. What do you make of this momentum?
Well, and I've said this kind of in my note. I think the market feels a bit toppy, right? I love the fact that we're trying to make new highs, but I also recognize the fact that we've made this really sharp recovery and reversal from that sell-off in April to where we are today. So I think the market's a little bit ahead of itself, which doesn't mean I think it's going to be a disaster. I think we're going to correct a little bit, and then we're going to move higher as we move into the end of the year. So I think investors should be patient. They shouldn't go chasing names, especially names that are well extended. I think they're going to have an opportunity to buy them a little bit cheaper and then, prepare as we move in. But look, it's all good news, right? You're not getting anything negative. Earnings are coming in, they're weaker than year over year, but they're better than expected, right? We're getting 71 or 72% that are beating on the bottom line. We're getting about 80% that are beating on revenues year over year. So that's not a negative story. Now, like American Express or JP Morgan, they had great numbers, but the stock sold off. I think that's just because it was a little bit of relief, right? That people going, oh my God, that was a great number. Let me just take some profits here. And they do. I don't think it's a negative story. I actually think you'll see them start to bottom out again as the market starts to move higher. But look, I think it's all good. I'm bullish on the future. I'm just cautious in the short term just because of what's going on with the Fed and all the drama around rates and Jay Powell and is he in or is he out? Ultimately, that's going to take us through the summer. Remember, Diane, you and I both know August gets really quiet in the markets. It's really the dog days of summer. And then we come in to Jackson Hole because there's no Fed meeting. And then we come into the fall and September, which tend to be fairly volatile months. They move to the downside. So investors can afford to be patient right now.
Okay, that's a good point. Investors can afford to be patient. Well, let's talk about the first name on your list. You got NuScale Power on your list. I mean, that's been a huge outperformer compared to the S&P 500. What's your view on this one, Kenny?
So listen, for all the same reasons, right? It runs in that energy space in small nuclear reactor space. So I think there's a huge market for that. Clearly, the thing is up 160%, I think, year to date. And if you look at the chart, which we're going to look at in a moment, it's starting to break out again, right? So I think it's a name, a space you have to be in, especially when they're talking about, the data centers. And look what happened in Pennsylvania earlier this week with the announcement of those data centers and the energy, whether it's liquid natural gas or other energy. This nuclear power, these small reactors are going to play a key role, I think, in where the energy market's going. So take a look at the chart and you'll see, and we'll go over in a minute. But you can see how we traded kind of flat there for a while, for a couple of months in between November and March, and then we had a little bit of a sell-off. We made new highs. We pulled back here in June and July, and now we're breaking out and making new highs again. So I think you have to kind of go with that momentum, but let's see what Rick has to say.
Rick, you are up. Take us through what you notice about this chart. I mean, this stock is up, more than 160% year to date.
Yeah, and this chart's a good example of kind of how breakouts work in general. There's a good example of a common type of price activity here at this green line, a notable high here, a retest of this high, marking it as resistance, and then a failure. We eventually solidified down in this area, as Kenny said, between 10, 15 or so. But then we started to have the push upward. We had this earnings event here, and then we had a gap up, and then price broke above and reheld that area near 30. A common situation that happens after a breakout is a brief period of sideways to downward consolidation, a bull flag, a bull pennant, this kind of price activity. Then the breakout comes above the initial highs. And it's kind of funny here because this chart is kind of pretty much evenly in $5 increments. We had our breakout here at 25. We held the line at 30. And things get a little bit messier here, but it's kind of the same idea. Same thing happened at 35. Same thing happened right around 40. Now 45 was our recent high. That would be one downside area to watch for the pullback then. Not saying that's going to happen, not a guarantee or anything, just describing a very common way that price activity can work in a stock that has a strong trend. And we can see here that things are improving in terms of momentum as well. For a while, we were seeing bearish divergence here on the RSI, even a pullback to that 50 midline. Now, though, the trend line has been invalidated. RSI is pushing back into that overbought area, which is typically regarded as a sign of strength in a trending market. So 50, once again, a $5 increment. That's roughly our +2 standard deviation channel. That could be an area to watch for resistance here. And as I said, then 45 is probably the nearest supportive level. Volume picks up once again around here near the 40 area as well.
All right. Kenny, any final thoughts on NuScale before we move on to your next stop?
No, other than I think, it's one of those names that you certainly could trade, but I think you have to hold a core position in it and in your portfolio as you go forward. You can trade around the core position, but I think it's a name that's going to be a winner in a long-term portfolio.
Okay, you make a great point about the need for nuclear, especially with the demand for AI. Let's move on to your next stock, HIMS and HERS. I know you see this as a disruptor, but it's faced some challenges this year. Still, you can't argue with the move it's made. What do you think about this one?
No, listen, it's a healthcare company, right? But they've got a strong position clearly in telehealth. They address a range of issues, whether they're mental, sexual, hair loss, weight loss, whatever it is. All these issues that are, front and center in people, all issues that we're all constantly getting hit at on Instagram or TikTok or anywhere else about the issues that they address, right? So while it's kind of in the healthcare space, which I think is okay, the healthcare space has been under pressure as a whole, but I think that this name individually is going to be a name that investors should at least take a look at it. If you look at it on the chart, we can see how it had a real spike back in February. It pulled way back to where it had been trading in 2024, spiked up again. We had a sell-off with a big gap down there in June, and now it's starting to repair that. We're just hitting our head on trend line resistance. The stock is off a little bit today. I think as it hit the resistance, it backed off, but I think it's just getting ready to gear up again and push through it. If it does, then I think it fills that gap and it rallies back to the $65 range where it was, the prior high.
Okay, then, Rick, what do you notice about that chart, especially given those levels that Kenny is paying attention to?
Give a visual here. This was the big spike up in February. This was the pullback. This was the subsequent spike. Now we have this kind of resistance trend line to keep an eye on around 65. Roughly 65, as Kenny said, was where things topped out for the most part. If you were to draw a horizontal line there instead. Then we had our big gap down. Heavy volume shows high conviction and heavy activity. RSI trending downward as well. Momentum still moving lower as we approach that 50 midline. And finally here, this red line, 53, that was our floor, and that now it's become our ceiling here to watch out for. We can see our two shorter term moving averages, yellow 21-day and orange 63-day, are starting to move sideways and flatten out while they also start to cluster together. That suggests weak trend direction or choppy price activity where it's too all over the place to kind of display a clear result. So nevertheless, it gives us an important boundary to watch. Right around 50.49, that matches up with our trend line here. That opens the door to the area near 42 for potential support, though. But if we do rally, then first 61.50, that's that gap level that we would reach, and then 65 would be another noteworthy point because it would represent those highs. We can see right about where we are now, heavy volume in this area as well, so a key area to work its way through, but really volume is heavy across the board between 40 to 60 or so.
All right, Kenny, let's talk about the last stock on your list. It doesn't have the same kind of patterns that we've seen compared to the previous two. KKR, you're looking at that one. What's your view on this one?
Listen, you got to understand, this one is now part of what this conversation is now about around what's happening kind of in the crypto space and the 401k space. Look, they're a leading investment bank, right? A private equity firm, and they excel in a very disciplined approach. They manage real estate. They manage private equity, right, through a range of things. But now considering this conversation that Trump's trying to allow these types of investments to go into 401k plans, firms like KKR stand to benefit, right? Now, while there may be lots of chatter around whether that's the right thing to do or the wrong thing to do, the fact is, if that happens, then I think there's going to be a boom for places like KKR, right? Because they're going to be able to tap into, the $1 trillion 401k market. Now, if you look at the chart will show the sell-off in April like the rest of the market did, but now it has measured its way back, hasn't gone up in a straight V, which I actually think is a better reaction. It's kind of, we traded up, we hit resistance, we backed off a little bit, traded there in a very tight range, and now we've traded up through resistance, long-term resistance, and it appears as if it wants to make a run to to what I think is going to be the February highs back at about 170. But let's see what Rick has to say.
Yeah, it's good. Kenny, I am, curious about that on a personal level, about that exposure you can get in your 401k through to private equity. But I do feel like it's, there may be great opportunities, but there's also risk there. But before I go too far down that road, Rick, take us through what you noticed about the chart for KKR.
Yeah, a stock that, like so many others, we hit that low point in April here, 86.15, lining up with the tariff news, but extremely heavy volume at these lows, not only here, but also previously here. So some important levels were reached in this region, kind of near 90 or so. That was around where we hit our lows. But from there, RSI has been climbing steadily upward. We can see that price has progressed in this white channel. Typically, one thing you can do is draw a conventional trend line going across the lows. If you duplicate it and try to match it up with the highs, it often matches up fairly well. Not going to match up every time here, but in this case, it suggests maybe a potential slowdown point here as we approach that 150 level. Here's the 140 level. This is the important point here. It was the high when we had our gap up, a low point here, breakdown point here. Now, after a bit of a struggle to break above, we seem to be pushing above that level. So as I was saying here, then if we do get a pullback as traders perhaps take some profits or adjust their positions, that 140 level could be potentially supportive here. We can see though that RSI is showing a small amount of bearish divergence, but it's also back in the overbought area. That's a bullish signal here. So look for price to continue upward and break back strongly above that trend line as well. And then 166.68, pretty close to those February highs. I specifically was looking to see whether price would fill that gap, though. That would be one, maybe more particular point to watch here, but just in general, those February highs. So volume nodes in the near term, 140 and 152 or so. Those could be potential congestion areas as well.
Okay, potential congestion areas. Kenny, any final thoughts on KKR or either of the other two tickers that you brought us, or the broad market? The floor is yours, Kenny.
No, listen, I think you bring up a good point about the potential to include these types of investments in 401ks and what that's going to mean for the retail investor and the risk that it potentially poses, and everybody having to go in with their eyes wide open if they're going to, in fact, start to play in that field. Look, because as I do, that it's particularly meant for accredited investors. If what they're talking about now is just opening the door to everybody, I think that has the potential to cause some issues, but investors in 401k plans need to understand completely the risk that they're going to run should this happen.
Yeah, it's true, because, there's the question about, what transparent information that you'll get versus what you typically get for publicly traded companies. All right, we'll leave our conversation there for today. That's Kenny Polcari of Slade Stone Wealth and our very own Rick Ducat. Have a great weekend, guys.